For the week, the markets did pop higher, but we stalled by week's end. My name's D7, and this is the weekend edition. Good through Sunday, April 17th, 2016. On Friday, all the markets but small caps were down. Small caps in bullish territory up 0.25%. You have right here crude oil down more than 2%. Big drop on crude oil. Gold higher by 0.7%. Silver up by 0.8%. And then the VIX down. And just before we get into all the technicals, I wanted to share with you something that I think you'll find interesting. It was something I shared in yesterday's video, but I want to reshare it for you weekend guys. You can pull this chart up yourself on your computer, but this is Apple AAPL, and pull up a daily chart and expand out the daily chart going back here, and this will put you in, I have October 23rd, 2014. Bring it all the way here, and that brings you to January 22nd, 2016. So you can pull this same chart up and analyze this more closely. Here is what I want to show you. I had this thought a little while ago, and I thought, you know what, this would be interesting. I'm just going to pull, I was looking at tech stocks, and I just pulled up the top one, and it happened to be Apple. And I scrolled back a little bit, took a timestamp, and then it's just a quick exercise. Just did this moments ago, actually. And it said, how many trade setups can I find here? So here's what I found. In this time frame, from October 2014 to January 2016, we had 457 days. Now that includes weekends, of course, but out of 457 days, I found 4 long positions, and I found 7 short positions. A total of 11 trades. Out of these 11 trades, 1 trade would have been for a loss. So 10 trades were profit trades, 1 trade was an expense trade. Out of my long positions, I netted $17.49. In my short positions, I netted $21.16. In total, my gross winnings in this snapshot would have been $38.65. And that would be times however many shares that I would be trading. It could be 10 shares, 100 shares, 1,000 shares. This could be the underlying asset to an option trade, and it could have exponential opportunities to make that much more money, right? So what I wanted to share with you here is that from the start of this snapshot to the end, the market actually lost $3.37 on average. You can, it's going to be right about that. You lost around $3. And that would have been a 1-year hold. So the buy and hold, so a big point I want to share with you here is buy and hold is not a strategy. Buy and hold is not a strategy. Number 2, you can't always be long or bullish in the market. You have to be able to navigate the waters and take advantage of opportunities, money-making opportunities when they are presented to you, both on the long and short side, meaning you make money when the market goes higher or the asset goes higher or when they go lower. So you need to be bullish and bearish and know when to do that. Number 3 is, if you notice, I profited on far more trades than I lost on. Now, my personal goal is 60% win rate when it comes to a win-loss rate. I want 60% or higher. That's kind of my line in the sand. I need to do at least 60%. In this case, I did far better than that. And how I was able to do that is by following strict trading rules. Now, in this chart, there were 11 setups that I took, total 11. And these are what we teach in our mentorship. And if they follow all the rules for each of those setups, then I pull the trigger and I enter the trade, be it long or be it short. So my point here is, if you want to be a successful trader and learn how to find opportunities and know what good probable setups are in the markets, you need to have a trading mentor. The bottom line is there's a common thread amongst all full-time traders, and that common thread is that each of them will tell you that they had or currently have a trading mentor. Well, we're certainly here to help you. Let us know if we can do so. Okay, we're back. I hope that you found that fascinating, or at least interesting. All right, here we are looking at the SP 500 Daily chart, and we popped up. Now on Friday, we got a lower high and a lower low. And with that lower low, that put me, so I stopped out of my long position. I am flat the market right now, flat the market up here at this resistance area. Remember, go down the bottom right hand corner, go to full screen and watch this in high definition. That will certainly help your viewing a pleasure. Anyway, I foresee after a big run like this, up, the market's looking for a reason to drop. You can see the trajectory dropping. This is a rolling over. And matter of fact, I could probably pull another line here from here to there, and that would make sense, technically speaking. So now with Friday's drop, it wasn't that big of a drop. To be quite frank, I would not be surprised if we didn't build a high base here. However, I think that I wanted to secure my money, because if it's going to base sideways, I can always get back in if it were to break out. But the last thing I want to do is be long right here after an extended run to the upside and then be at a resistance point. Let's look at the Dow. Big rising wedge. I'm going to actually pull another line here coming across right there. Resistance. Got near the resistance, but we're finding weakness already. This is just looking bearish to me. Bearish. I'm going to look here at the MACD. Let's see if we can get... So another big problem with the MACD is we have a huge bearish divergence. We don't have a negative tick on the histogram yet, but it looks like the markets can be in real trouble here. Real trouble. Let's look at the Nasdaq. Nasdaq, instead of popping up and immediately hitting a resistance point, because every time we'd hit resistance here, we hit here, we hit, we're just failing to hit right now. It's showing some relative weakness. Matter of fact, with this MACD, you can see it, another bearish divergence, but we do have a bearish tick on the histogram here. So that spells danger for the Nasdaq. And here's small caps. Small caps would go up to this rising wedge. Big bearish divergence, but the bearish divergence was broken right here. So because of that, I'm not nearly as bearish here as what I should be, because it looks like we're building a high base. If we can pop over the 200-day moving average, things could get fairly bullish here on small caps, and that could lead the charge for the rest of the markets. Banks on the daily chart, up, but we failed to hit resistance. We're just pausing right now. Financials, up, again, pausing. We got a bearish thrusting pattern, reversal pattern here, but a big rising wedge, not overly good. And I'm going to go to the weekly charts now on these indices. Now this is very interesting here. We're at a crucial area. Crucial area, and it looks like we almost got up over it. But for the weekly chart, we're up for the SP500, and we smash our head at this resistance point. And that resistance was here, and we dropped. Here we dropped. Here we had a big drop, and we're there again, and almost like it's poking its head over, which is looking a little more bullish here, just because it did get over that. It's overall major moving average as far as the weekly chart is concerned. And take a look here at the Diamonds. Diamonds above resistance. Resistance. The Dow has been above it. Last week it got above it, or 2 weeks ago it got above it. Dropped back below here last week, but this week decisively above. But it stalled at a resistance area of this swing high coming across again on the weekly chart. The Nasdaq up here, and a couple weeks ago, last week, started to head down, but then we pop back up. This line is proving to be a big time area of resistance. The question is, can we pop through this, or are we going to drop? But we're very extended. Again, if you enter long right now, you're entering at a high. You're entering after it's already had its big run. This is just a poor time to get in. Again, I did go flat over the weekend. I can re-add if we start to rocket back north, but I think the odds are against that. Small caps, Russells, actually I said it was the S&P earlier. It's the Russells, I think. Let me see. Yeah. My first one I was calling the S&P was actually the small caps. So earlier I stand corrected. I was looking at the small caps that popped its head over this resistance point. Now, the spiders definitely got above it. Look at this. Resistance, boom, above resistance. That is a big move, gang. We got a couple areas of big resistance coming up here that we have to contend with. But we end the week fairly bullish for the far as the weekly is concerned. Very, very interesting to see there. I'm going to go here, take a look at the US dollar. I was calling a buy on the dollar earlier, but we come crashing back down this week, on Friday. So I'm still going to say buy on here, but it's looking much weaker than what it did. The weekly chart, down. It wouldn't surprise me to see this start to head higher fairly soon. On crude oil, the daily chart, up, and then a decisive move to the downside. So I'm going to bring this line over now and get rid of this one. Move this to here. And so we're heading down. The question is, will this be a bull pullback for another rally? But this would not fit within our rules to trade as a bull pullback. It breaks several rules as far as what we teach in the mentoring class. But we're just consolidating in the moving averages here. As far as gold is concerned, down, but we did stall, but we stalled right in the middle of these moving averages. Not an area that I'd be interested in looking for a long position. Silver, that's my phone, text coming in. Silver started to drop Thursday. Friday bounced back up, tried to break over, but it closed right back at that resistance level. Huge resistance area here, and it's the question is, are we going to drift downward, or are we going to go higher? This is silver. I think it has a better chance of dropping, but if it builds a high base, it could rally and get bullish. The VIX, here's the VIX chart. It's at last time we were this low. Holy smokes, this goes back a ways here. Last time we were down to this, this was August of 2015, the last time we were at this low. So far as the fear is concerned, we are very, very, very low here. Not too bad. Wow, it's looking fairly bullish. As long as this goes down, that is bullish for the market. I want to quickly look at the monthly charts for the month, and we're only halfway through the month, but we are, for the SP500, the spider, we're over a trend line. This is very important. I'm calling this a sell area, but if it can close above that, I'm going to reverse that red to a green, but I can't do it yet. It's only halfway through the month, but this is looking pretty bullish at this moment, but it's stalled at a resistance area coming across. And a lot of times and to poke its head over resistance and then come right back down, closing just below it. The Dow monthly decisively above resistance, a couple resistance areas. It's looking pretty strong. And then Nasdaq not looking nearly as strong as everybody else, but we are heading higher with more upside potential on the month. Small caps is right at resistance. I'm calling it a sell, and I'm staying with my sell at this moment, but we're at resistance. Every time we hit this line, we drop. We're there again. I'm expecting a drop, but we'll see if that happens, and we'll call it when it does. So anyway, mentoring, gang, cannot do without it. Grok trade, we can show you how to find what trades to get into, where to enter those trades, and how to protect yourself. Go to Grok Trade, click on Trading Mentor, watch the videos.